Well, hello there to you yet again, and welcome to my pencast on Chapter 5 on the topic inventory. It's about 5 degrees outside. It's quite late at night. I'm trying to be somewhat quiet, but I'll talk loud enough so you can hear me. My voice is scratchy too, and I'm sneezing, wheezing, and sniffing, so I'll try to keep the cold sounds to a minimum. I'm sorry, I'll quit whining. Let's get back to the topic, inventory. So, this chapter, let's have a goal. Our goal will be to learn to journalize entries common to the purchasing of inventory using the perpetual method in this pencast. There'll be several in this chapter, so we'll cover sales and different kinds of income statements shortly. Next, what is it we'd like to bring forward from past chapters? 2 items really coming forward. The first being journalizing, how to do journal entries from Chapter 2, and then the topic of the accounting cycle from Chapter 2, 3, and 4. The accounting cycle, in its first steps, has you analyze and journalize transactions for the month, and then post them to the general ledger. Then we make an unadjusted trial balance. In this pencast, we're going to look at journalizing the purchase of merchandise inventory and everything that entails. This merchandise inventory is inventory that we have purchased with the idea of reselling it for a profit. So anytime you're about the merchandising, whenever you buy something, put it in the account inventory. Again, anything we purchase is for the purpose of resale, not of use. Let's start with some transactions. Let's have our first journal entry be recorded on January 10th, and it will be for the purchase of merchandise inventory in the amount of $2,000 with terms 210 net 30 FOB shipping. And as you know from your reading, that means I get a 2% discount if I pay it within 10 days, and if not, it's due in 30. The terms FOB shipping tell me the title transfers when the person I am purchasing from takes this to the shipping place, and so it becomes mine as soon as they hit the shipping docks. I will be responsible for freight charges. What I would like you to do is to put this pencast on pause and make a journal entry for me that you think will record this transaction. Go ahead and do it now. Welcome back. How'd you do? We debit inventory and we credit accounts payable. Excellent. Let's say on the 12th of January, an invoice comes along on freight for this purchase. A $100 invoice comes in the amount of $100, and we pay it immediately with cash. What would a journal entry like that look like? Put this on pause and go ahead and make it for me. How'd you do? All costs related to procuring inventory and getting it ready for its intended use are capitalized into the inventory account, so that $100, since it was paid to directly purchase that inventory, will also get capitalized into the inventory account. Let's have another transaction. Let's return $500 for the inventory that we purchased on January 10th. Go ahead and put this pencast on pause and make me an entry. Welcome back. How'd you do? I reduced accounts payable to show that I owe less, and then I reduced inventory. Remember, we're using the perpetual method of accounting for inventory, and anytime inventory comes or goes, we immediately take it to the inventory account, hence the name perpetual. Now, one more entry. Let's have this one be on the 17th. Can you guess what it will be? We're going to pay the balance owed on our account for the purchase on 110. Since we've had a couple of transactions that affect the accounts payable account, let's see exactly where we are. We have a $2,000 charge from our first transaction, and then we have a $500 reduction from the amount we returned. And that means that we have $1,500 left in this account. Notice that we're paying it within the discount period, which was 10 days. That means that we are able to take the discount. So, let's see what you do with those hints. Go ahead and make the journal entry for me, put this on pause, and come back and let's see how you do. How's it look so far? We reduce accounts payable for the $1,500 that we owe, thereby bringing that account to zero, so accounts payable is correct. We write a check for $1,500 times 98%. Another way of saying that's $1,500 minus a 2% discount. And what do we do with the $30? On the perpetual method of accounting for inventory, we reduce the account inventory for it and consider it a reduction in the price of our inventory. Let's take a minute now and review everything that happened to our inventory account. A purchase of inventory under the perpetual system was immediately put in the inventory account. And that took care of our first transaction. When we paid transportation to get the inventory delivered to us, call that freight in or transportation costs. Accounting, we use a lot of words that mean the same thing. I know it can be confusing. That's also taken directly to the inventory account. When we return inventory, that's directly credited to the account. So inventory returns immediately come out of the account as it's kept perpetually up to date. And discounts, purchase discounts, are also taken out of the account. That leaves a balance in the inventory account. I had to do a pen change there, new cartridge change, of $1,670. $2,100 minus $530. Just check my math, and it looks like I'm wrong on that. It looks like it's $1,570. Got a little distracted by that pen. I would have made an accounting error there and had to have said, oh, when they said, where'd you get $1,670, I would have had to say, oh, that's the serial number off my calculator. So, enough. Inventory, in summary, when using the perpetual system, picks up all the purchases immediately, has all the returns deducted from it immediately, picks up all the freight in or transportation costs directly in it, and has all the discounts directly taken out of it. So the net for this purchase would be $1,570, which, if you look at it, is what we paid for it. $1,470 from the invoice at its net amount, and $100 for the freight charges. $1,570. So that concludes our discussion on how you record journal entries that are common to the purchasing of inventory using the perpetual method. Come back soon and we'll look at journal entries that are common to selling inventory. Talk to you soon.